Hi everyone, this is Mrs. Bichen. So welcome to my Form 4 Accounting Lesson 3. And today is 24th February 2020. Okay, so in the last lesson, we have 3-column cash book. And after that, we're going to jump to chapter 7 because they are closely related to each other, and which is bank reconciliation statements. You okay? All right, so now here is the cash book. All right, but this time in this chapter, we only focus on the bank column, okay? And then we ignore the discount column, we ignore the cash column. All right, so now here is the cash book. We only look at the bank column, and the debit side is positive, means we have check received it. Whenever we have check received, we debit bank or the cash book, and then if we have check paid, we credit cash book, and which is the bank column. All right. Okay, so here we have example on the debit side of the cash book. That means we receive check from Kelly. Who is Kelly? Kelly must be our customer, and which is same as trade receivable. Okay, and let's say we receive 1,000 from Kelly. All right, and at the same time, who is Crystal? Here, Crystal is our supplier, and let's say we have to pay 600 to supplier, which is also trade payable. Okay, so now let us close the T account. So this is 1,600, so we put 1,000, always the larger figure at the bottom here. All right, so 1,000 same as 1,600, we need to insert 400 here, and then we say this is the closing balance, and it is also the balance carried out, right? Okay, so the bank column is always related to the check received and check paid. Okay, but the point is, after receiving the check from Kelly, we must go to the bank. All right, otherwise we cannot get money, is that right? So that here we have the bank statements. And the point is, who's preparing this bank statement? This bank statement not prepared by our firm. Let's say we have money with HSBC, for example. So HSBC prepares this bank statement, and this is our bank statement related to our business. You okay? All right, and now we have this 1,000. We put and deposit the check with our bank. All right, and now where is the 1,000? The 1,000 is in the bank and belongs to us. But however, when people in HSBC, they receive this bank 1,000, and this 1,000 is not belongs to HSBC. So to HSBC, this 1,000 is a kind of liability to them. Therefore, they will put this 1,000 not on the debit side, however, on the credit side. So there is 1,000, and which is check, deposits, and which is Kelly. Okay, so be careful about this. All right, so the credit side, the people in the bank will put this 1,000 on credit side because this credit side is a kind of liability to the bank, but to us, which is positive. Okay, all right, so and then look at this check paid to Crystal. So this is after this 600, we will have less money in our bank account. So the people in the bank will put this 600 on the debit side, and which is a check issued to Crystal, for example. Okay, so that the debit side in the bank statement is a negative thing to us. Are you okay? So be very careful about the position for debit, credit in the bank statements. All right, so if you look at this, 1,000 on credit side, 600 deducted, so the balance will be 400. Are you okay? So therefore, the closing balance in the cash book and the closing balance in the bank statement should be always the same. But the point is, in chapter 7, very often the closing balance and the closing balance, they are not the same. So that's why we have to find out the reason why they are not the same. And this is called bank reconciliation statements. All right. Okay, so here is the table to show you one more time about cash book and bank statement. So the debit side in the cash book is positive. That means we have more money in the bank accounts. So credit side is negative. All right. So since bank statement is not prepared by us, however, prepared by the people working in the bank, all right, so that the position here, debit and credit, will be exactly opposites. All right, so the credit side in the bank statement to us is positive. That means we have more money in the bank. So that here will be negative. All right, so therefore, so these two closing balances in the cash book and in the bank statement, they are supposed to be same. So, but very often they are not the same. And then I'm going to explain to you why they are not the same. Okay, so why chapter 7? Because chapter 7 is to explain and find out the reasons, here reasons, to explain why cash book, the closing balance in the cash book and the closing balance in the bank statement, they are not the same. So if you refer to your textbook on page 243, you will have this meaning of bank reconciliation statements. Okay, so for example, here is the cash book, right? So what about if we have done something here in the cash book, but however not yet done in the bank statement? So what do you think? Then the closing balance, of course, must not be the same. Is that right? Or another situation, what about if the bank has done something in the bank statement, however we have not done in the cash book? What do you think? Then the closing balance, of course, must not be the same. So this is the idea, all right, about chapter 7. Okay, so therefore, to do this chapter 7, to find out all the reasons why the closing balances in the cash book and closing balances in the bank statement, they are not the same. Because, number one, okay, we can have items already done in the cash book and not yet done in the bank statement. So therefore, what do you think? The closing balance must not be the same. Or the other way around, here we have item 2. So items done in the bank statement, however, not yet done in the cash book. So this is the major idea in this chapter, chapter 7, bank reconciliation statements. All right, so the next thing I'm going to go through each reason step by step with you. And now this is step number 1. Okay, I'm going to explain each reason to you step by step. Now here, category 1, saying it is done in the cash book, but not yet done in the bank statement. So therefore, the closing balance in the cash book and the closing balance in the bank statements must not be the same. Therefore, we have to find out the reason. And the reason, the first one is unpresented check. Now this is important, so you can highlight this unpresented check and learn the meaning here. Unpresented check means a check issued, means we pay a check to somebody else. For example, we pay a check to Crystal, and Crystal is our supplier. Okay, and to remind one more thing, this is the cash book. We have debit side and credit side. Remember what is debit side? Debit side means positive to us, means we have more money in the bank, and credit side is negative, means we have less money in the bank account. And remember, the debit and credit in the bank statement will be just opposite because we have the people in the bank preparing the bank statement. So this is positive, means more money in the bank, and this negative, less money in the bank. So since we pay check to supplier, we will have less money in our bank account, so we credit cash book. So I put a tick here, means we have this transaction done. All right, but however, if Crystal just keep the check in her wallet, okay, and never go to the bank, so the bank will not notice and the bank will not deduct money from our bank accounts. All right, so cross here, that means not yet done in the bank statement, but we have done this in the cash book. Okay, and the related double entry we have done related to a check paid, same as check issued, will be credit bank, since we have less money in the bank, and then now we pay money to creditor, and that is trade payable. So we have done this in the cash book, but not yet shown in the bank statement. So this is the meaning of unpresented check. Okay, so next one, we come to the second reason. All right, so which is uncredited item or bank lodgements. So bank lodgement is the old name, but in DSE, this name uncredited item is used more often. All right. Okay, what is this again? So this is a check. This time we receive a check. All right. If we receive a check, we have more money in the bank account, so we are going to debit the cash book. All right. Okay. And the related double entry will be debit bank, because we have more money in the bank, right? And who pay us money? That will be customer, that will be debtor, and that will be trade receivable. Okay, so right away after receiving check, we will do this double entry, so that done in the cash book and done on the debit side. Debit side means we have more money in the bank. Why? Because we receive check here related to uncredited item. All right, so now we have a piece of paper, which is a check received. If we don't go to the bank, we can't change that into money. Is that right? Okay, and now we go to the bank to make a deposit with the bank, with our bank. Okay, but however, we go to the bank very late. So therefore, within this month, okay, so it is not possible for the bank to put this transaction on credit side. Okay, because we go to the bank so late, and this transaction in our bank accounts will be shown in the following month. But in this month, it is not yet done on the credit side in the bank account. All right. So what does mean a credit side in the bank statement? Means we have more money in the bank, but which is not shown. Okay, in this month's bank statements. Okay, so this is about items existed in cash book, done in the cash book, but not yet done in the bank statement. So that's why chapter 7 is about bank reconciliation statement, to find out all the reasons. So why the closing balance in the cash book and the closing balance in the bank statements, they are not the same. So now we have unpresented check and uncredited item or bank lodgement. Okay, next we come to another category, which is just the opposite. This time, what about items done in the bank statement, but however we have not yet done in the cash book? Okay, now here step by step. The first one is credit transfer. All right, so let's highlight the term. And credit transfer is same as direct credit. It means what? So somebody puts money directly in our bank accounts. All right, so what do you think? Therefore, we will have more money in our bank account, right? Automatically, some people put money directly in our bank account. So this time I put a tick here on credit side. Okay, so let's write down again. Credit in the bank statement is positive to us, means we have more money in the bank accounts, and this is negative. And credit side in the cash book means we pay check is negative, and this is positive, right? Same as before. All right, so therefore we have more money in the bank account and shown on the credit side of bank statement. So however, we shouldn't know about this thing until we have bank statement received it. All right, so if we don't know about this, so that it is not possible for us to do this here. So not yet done on debit side of the cash book, even though someone put money directly in a bank account. Okay, so we will do that after we check the bank statement to show this. We will do that later, but at this moment we don't know that, so that we do not debit the cash book yet. So this is category 2, the first one. All right. Okay, so next we have auto pay. Same as standing order, same as direct debits, same as debit transfer. If you make comparison about this direct debits and direct credits, actually this time they are just the opposites. Now here is the meaning. That means we give instruction to our bank, all right, to deduct money from our bank account. So I put a tick here. So money already deducted in the bank statement. Why? Because for paying rents, for paying electricity, for paying some auto pay as expenses automatically. But we are not going to know about that until we have the bank statement received it, so that we have not yet done this on credit side in our cash book. Are you okay? So later on, after receiving the bank statement, we need to do something to adjust the double entry here later on, not at this moment. So the double entry will be credit bank later on. Okay, and very often the auto pay is related to expenses. For example, later on. Okay, and later on for this, we go back. Later on, after receiving bank statements, we have to record the double entry in our books. And that will be, since this is receiving money, someone put money directly in our bank account, so that we have more money received at debit bank, and trade money received from trade receivable, that is customer, that is debtor. So this is the double entry we do later. Okay, and this is also the double entry we do later, but at this moment it is not yet shown on credit side of the cash book for auto pay, for standing order, for direct debits, for debit transfer. Okay, so the next thing in this category will be dishonored check. So to explain dishonored check to you, okay, we need this step by step here because it is a little bit complicated. All right, so the story is like this. Number one, check, we receive a check. Let's say we receive check from Kelly, so we debit bank. All right, and credit trade receivable, and that is Kelly. Okay, so after receiving check, we must go to the bank, so step 2. All right, and the bank will put this on credit side and saying that we have more money in the bank. Is that right? Okay, unless this is, let's say this is HSBC. Okay, so this is HSBC. We are using HSBC's bank services. And however, the check paid by Kelly is from BOC. Okay, so therefore, HSBC will go to BAC to ask Kelly for money. But realize that there is no money actually in Kelly's bank accounts. So therefore, the bank will cancel the check. Here, put a tick. All right, so at this point, this is dishonored. Dishonored means a check received which worth nothing. Why worth nothing? Because actually there's no money in Kelly's accounts. All right, so to explain this part, dishonored check happens in step number 3. Okay, put a tick on debit side of the bank statement. So why on debit side of the bank statement is to reverse the check received, because there is no money actually in Kelly's account. All right, so and then for number 4, at this moment we don't know there is dishonored check at this moment, so that this is a tick here done in the bank statement to reverse the check, but we don't know that. Okay, we don't know that, and then we need to cancel the check received here. All right, so this is the meaning about dishonored check. So what will be the transaction later to adjust this later on? Okay, since the check received worth nothing, we need to reverse check received from Kelly. Okay, so therefore the double entry will be opposite to step number 1. So debit trade receivable Kelly and credit bank. So here will be exactly step number 4. So debit trade receivable Kelly and credit bank. So this will be the adjustments later. Okay, for this point, because not yet done in the cash book. Okay, so number 4, also in this category, done in the bank statement but not yet done in the cash book. Okay, revision again. Debit side in cash book means positive. This is negative. Negative means we have more money in the bank, and this is just opposite in the bank statement. This is negative to us and this is positive to us. Okay, same as before. Now the next thing is bank charges. All right, so what happened about this? Since we are using services provided by the bank, so the bank will charge us some services fees here. How? In the bank statement, the bank will deduct money from our bank account. So put a tick here. Okay, but we don't know that until we have bank statement received it. So we have not yet credited our cash book. So later on, for adjustments, so we need to do this later on. So that is, we have less money in the bank, so we credit bank. And this is bank charges, and which is a kind of what? Expenses in the profit and loss account or expenses in the income statement. But at this moment, which is not yet done in the cash book, only until we have bank statement received. Okay, number 5, also in this category, done in the bank statement, but not yet done in the cash book. So under what situation we have to pay interest? So when we have a negative balance in the bank account, remember what is negative balance, which is called the bank overdraft. And also when we have a credit balance in the bank accounts, therefore the bank will charge us interest. So deduct money from our bank account. So deduct money. All right, but we don't know about that after we have bank statement received it. So the double entry later on for adjustment will be less money in the bank, so we credit bank, and then this is interests in the profit and loss account. Okay, now we come to the summary and conclusion in this chapter. We learn all the reasons to explain why the difference in the closing balance in the cash book and the difference in the bank statements, they are not the same. Mainly 2 categories. So done in the cash book, not yet done in the bank statement. There are 2. One is unpresented check, one is uncredited item. You can see tick and tick in cash book, but cross and cross in bank statement. So similarly, so another group 2. So done in the bank statement, not yet done in the cash book. So we have credit transfer, we have auto pay, we have dishonored check. You realize that we have tick and tick and tick in the bank statement, but all cross means not yet done in the bank statement. But which side, debit side or credit side, you have to think whether we have more money or less money. So the last 2, bank charges and interest charges as well. So you have tick and tick means done in the bank statement. Cross and cross means not yet done in the cash book. And why debit side in the bank statement? Because we paid money. We have money being deducted by the bank and not yet credit our cash book. Okay, so this is it about the very basic idea in this chapter. Thank you for watching my video. I'll see you next time. Bye bye.